everyone, welcome to Oliveboard. So this video is on subject bank financial management, one of the important subject for CAIIB, and we are going to discuss modules A, International Banking Chapter 4, that is documentary letters of credit. Okay, we will discuss every MCQ and learn the concepts behind these MCQs. So let's get started with our video. So basically, if you have any doubt, you can put your doubt in the comment box, or me and my teaching assistant will answer all your queries. Moving to our first question. Here, in this question, we have to mark the statement that is correct. Okay, and the four options are given. First one, the LC must have an applicant and a beneficiary. See, if we will see this statement, so discussing this, like we can say that here LC must have an applicant and a beneficiary, because this statement is correct. Why this statement is correct? See, in LC, there are two essential parties. First one is applicant, the party that requests the issuance of the LC. Okay, typically the buyer, we can say that, and the applicant is the one who initiates the LC process by applying to their bank for an LC. Then beneficiary, the another party. Beneficiary, the party that receives the payment under the LC. Usually they receive payment from the bank upon presenting compliant documents, and having an applicant and a beneficiary is a fundamental requirement for an LC, as it defines the parties involved in the transaction. Okay, now we can take the example here, and then we will discuss that what is LC. Basically, what is the meaning of LC? LC is, like we can say that here, letter of credit, which is a financial instrument. I'm talking about letter of credit, financial instrument used in international trade to facilitate payment between a buyer and a seller. It is a written commitment by a bank to pay a certain amount of money to the seller on the behalf of buyer, provided the seller meets the terms and conditions specified in the LC. Okay, and here our first statement is correct, that is the LC must have an applicant and a beneficiary. So the we can take the example to understand this term better. So here we can take the example, like we can say that there is a buyer. Okay, let's say a buyer. ABC Inc. wants to purchase goods from a seller. Okay, and seller is XYZ Limited, located in different country. To facilitate the transaction, ABC Inc., that is the buyer, approaches in bank A to open a letter of credit in favor of XYZ Limited. Now, in this scenario, we can say that ABC Inc. is the applicant, the buyer who requests the LC. XYZ is the beneficiary, that is the seller, who will receive the payment. Okay. The LC is issued by Bank A, and it guarantees payment to XYZ Limited upon presentation of complaint documents. Okay. This example demonstrates that a letter of credit must have an applicant and a beneficiary. Okay. Now, we can also understand the LC with the help of an example. Suppose there is a story of ABC and XYZ Limited. Okay. ABC Inc. is like a clothing manufacturer we can take based in New York, wants to import a large shipment of high quality cotton fabric from XYZ Limited, a reputable textile supplier in India. And the total value of the shipment is like $100,000,000. To ensure a smooth transaction, ABC Inc. approaches its Bank A, and there open a letter of credit in favor of XYZ Limited. The LC is a written undertaking by Bank A on behalf of ABC Limited, INC, to pay XYZ Limited the agreed upon amount of $100,000,000 upon presentation of compliant documents. Okay. Now, how the process works. See, ABC Inc. and XYZ Limited agree on the terms. ABC Inc. and XYZ Limited negotiate the price, quality, and delivery terms of the cotton fabric. They agree that the XYZ Limited will ship the fabric to ABC Inc. warehouse in New York. Now, ABC Inc. requests an LC from Bank A. ABC Inc. approaches Bank A and requests an LC in favor of XYZ Limited for $100,000,000. Bank A agrees to issue the LC after verifying ABC Inc. creditworthiness. Bank A issues here the LC, and then Bank A issues the LC, which includes the following details like name of the beneficiary, the amount of the credit, the expiration date of the credit, the documents required to be presented by XYZ Limited, and also some other necessary documents for the exportation, for the export of goods. Okay. Now, Bank A advises XYZ Limited that the LC to its correspondent Bank of India, Bank B, which advises XYZ Limited of the LC issuance. Now, XYZ ships the goods, okay, ships the cotton fabric to ABC Inc. warehouse in New York, and here XYZ Limited presents the documents. Now, if the documents are compliant, Bank B pays XYZ Limited the amount of $100,000,000, and then Bank A reimburses Bank B. Okay. So understand what is LC, what is the example of LC here, which statement is correct, why LC must need an applicant and a beneficiary. So we can say that the LC must have an applicant and a beneficiary. That statement is correct here. Okay. Moving to the next question. Now, what is advising bank? See, the bank through which the issuing bank arranges to advise the letter of credit the beneficiary. That is advising bank. Okay. Now, here we have to mark the correct one, and the four options are given. So here first term is irrevocable LC. What is irrevocable LC? See, is a type of LC that cannot be revoked or cancelled once it has been issued. This means that the issuing bank is committed to honoring the LC and making payment to the beneficiary upon presentation of compliant documents. However, an irrevocable LC can be amended without the concurrence of the parties concerned, which means that the issuing bank can make charges to the LC without needing the approval of the applicant or the beneficiary. Okay. Then second one is given here, a term that is red clause LC. Also a type of LC. See, red clause LC is not actually printed in red letters. Instead, it is a type of LC that allows the beneficiary to receive a percentage of the LC's value as an advance payment before shipping the goods. See, this type of LC is often used in situations where like the beneficiary needs to finance the production or procurement of the goods. The red clause refers to the special clause in the LC that permits the advance payment. Okay. Then what is confirmed LC? See, confirmed LC we can say is a type of LC that is confirmed by a bank, usually in the country of exporter, to provide additional comfort to the exporter. When a bank confirms an LC, it adds its own undertaking to honor the LC in addition to the undertaking of the issuing bank. This provides an extra layer of security for the exporter as it ensures the payments will be made even if issuing bank defaults. Okay. And then we will discuss about transferable LC. Transferable LC is a type of LC that can be transferred by the beneficiary to another party, usually a supplier or a subcontractor. We can say that. And we'll see here the correct statement is confirmed LC is confirmed by bank, usually in the country of the exporter, for giving additional comfort to the exporter. That is not explorer, that is exporter. See, this is the correct, because confirmed LC is confirmed by bank. As I already told you, what is the meaning of confirmed LC? And if we take the example of this, like we can take the example. For example, there is an Emma, an exporter from the United States who usually owns a company called Emma Electronics. She have the contract to sell electronic devices to the buyer in Japan, represented by a company called Tokyo Tech. Okay. Now, to ensure that Emma receives payment for her goods, Tokyo Tech opens a letter of credit with their bank, Tokyo Bank. The LC is confirmed by Emma's bank in the United States, US Bank, which provides an additional layer of security for Emma. This means that if Tokyo Bank fails to make payment, US Bank will pay in and pay Emma the amount specified in the LC. Okay. So basically this type of this is the example of confirmed LC here, and I hope you understand what is the meaning of irrevocable LC, what is the meaning of red clause LC, what is the meaning of confirmed LC, and what is the meaning of transferable LC. Okay. Moving to the next question here. So first we discuss here what is applicant. Basically, the party on whose behalf the letter of credit is opened, and confirmation is like responsibility taken by bank on behalf of the LC issuing bank to make payment against presentation of credit confirmed documents. Okay. Okay. Yeah. Next question is bank to bank LC is. Now, what is bank-to-bank LC and what is the meaning of this? So here, bank-to-bank LC is also known as back-to-back LC. Okay. And it is a type of letter of credit where one bank opens a LC on behalf of its customers using another LC opened by another bank as collateral. In this case, the correct answer is like the LC opened on the banking of an import LC, which means that the banks open a new LC using an existing import LC as security. And we can take the example here, like suppose there is a company that is Importer Inc. A company based in US wants to import machinery from Exporter Limited, that is company based in Germany. And the total value of the machinery is $100,000. To facilitate the transaction, Importer Inc. approaches its bank, that is Bank of America, and requests a letter of credit to be issued in the favor of the Exporter Limited. However, Bank of America requires here collateral to secure the LC. Meanwhile, Exporter Limited has already received the LC from its bank for a different transaction with a customer in Japan. The value of the LC is there $120,000. Now, Bank of America approaches Exporters Limited Bank and requests to use the existing LC as a collateral to issue a new LC in favor of Exporter Limited. Now the bank there agrees and Bank of America issues a new LC to Exporter Limited for $100,000. And using here the existing LC as security. Now in this scenario, the new LC issued by Bank of America is a bank-to-bank LC, also known as back-to-back LC. It is opened on the banking of an import LC, which is existing LC issued by Exporters Limited Bank. Okay, understood? So that is bank-to-bank LCs. LC opened on the banking of an importer LC. So here our important term, issuing bank is like that bank issues letter of credit on behalf of applicant and issues reimbursement authorization, and letter of credit is like a mode of payment in international trade where LC issuing bank on behalf of the applicant undertakes to make payment to the bank having negotiated the documents on presentation of documents as per the terms of the letter of credit. Okay. Understood here? We learn the terms, we see the logic, we learn the new concept, and we also saw the examples of different things. I hope it helps you. Now the next question, yes, the important question. The UCPDC 600 is. UCPDC 600 is, 4 options are given. Now, we know that UCPDC 600 stands for Uniform Customs and Practice for Documentary Credits, and it is a set of rules published by the International Chamber of Commerce, that is ICC, that governs the use of letter of credit in the international trade. The latest version, UCPDC 600, was published in 2007 and provides a standardized framework for banks, traders, and other parties involved in the LC's transactions. Okay. So here we can say the UCPDC is here we can say set of rules framed by ICC governing LC business globally. This option is correct here, and we can take the example here. So here we can say a company that is Global Trade INC, a company that is in US, wants to import textiles from a supplier in India, and the total value of the textile is $500,000. To facilitate the transaction, Global Trade INC approaches its Bank of International Trade and requests a letter of credit to be issued in favor of the supplier. Now, Bank of International Trade agrees to issue the LC, but informs Global Trade INC that will be subject to the rules of UCPDC 600. Global Trade INC agrees and the LC is issued with a clear understanding that it will be governed by the UCPDC 600 rules. Now, as per the LC terms, the supplier is required to present certain documents including a commercial invoice and a bill of lading and to Bank of International Trade in order to receive payment. However, when the supplier presents the documents, Bank of International Trade notices that the bill of lading is not in the exact format specified in the LC. Now, according to the Article 14 of UCPDC 600, understand carefully here, which deals with the examination of documents, Bank of International Trade has the right to refuse the payment. if the documents do not comply with the terms of the LC. In this case, Bank of International Trade decides to refuse payment due to disparity in the bill of lading. The supplier is unhappy with the decision and approaches the Global Trade INC to resolve the issue. Now, after reviewing the documents and the LC terms, Global Trade INC agrees that the supplier did not comply with the terms of conditions and terms of the LCs, and the Bank of International Trade decision to refuse payment in its accordance with UCPDC 600 rules. In this scenario, UCPDC 600 provides a clearer framework for the parties involved to follow, ensuring that the LC transaction is conducted in a fair and standardized manner. So we can say that here UCPDC is a set of rules framed by ICC governing LC business globally. Okay, understood? Moving here, we can say bank-to-bank LC and LC issued by banking of another LC, mostly local LC, open for procurement of goods locally based on export LC. Now, question 4, that is ICC is here. What is ICC basically? See, ICC, International Chamber of Commerce, is a global business organization that publishes and governs the UCPDC. The ICC is responsible for developing, maintaining, and updating the UCPDC rules, which provides a standardized framework for banks, traders, and other parties involved in letter of credit transactions. Okay, so we can say that ICC is a trade body for Indian exports, helping to increase, here the correct answer is the trade body governing the UCPDC rules. This is the correct answer here. ICC is the trade body governing the UCPDC rules. Okay. So bill of exchange, we know that a document drawn by the supplier, that is creditor, on the buyer or LC opener opening bank, as the case may be, claiming the amount to be paid under the bill LC. Okay. Now, moving to the next one. See, in an LC transaction, following parties are not involved. Okay. So we have to recognize that parties which are not involved in the LC transactions. So, we can say in a typical letter of credit transaction, the following parties are involved, that is the exporter, which we called as beneficiary, the party that exports the goods or services and receives payment under the LC, the issuing bank, the bank we can say that issues the LC on behalf of the importer, that is applicant, and guarantees payment to the exporter, the advising bank, the bank that addresses the LC to the exporter and may also confirm the LC, adding its guarantee of payment. Okay. However, there is no role of the opening bank representative office in beneficiary's country who helps source business for the issuing bank in an LC transaction. The opening bank is typically the bank that opens the LC on behalf of the importer, but it does not have a representative office in the beneficiary's country, basically that helps source business for the issuing bank. So we can say the party which is not involved is the opening bank representative office in beneficiary's country who helps source business for the issuing bank. Okay. Now, okay, moving to the next one here, one thing is given, that is bill of lading, a transport document evidencing movements of goods by sea. Okay. Now, yeah, sixth question, bill of entry is required to show that. Okay. So we will see what is basically here bill of entry. Now, bill of entry, what do you mean by bill of entry? See, bill of entry is a document that is required to be submitted to the customs authorities in the country of import, declaring the arrival of goods at a port of entry. It is basically used to account for the goods that have been imported into the country and to assess the duties and taxes payable on them. So, bill of entry is required to show the goods that have been come into the country of import. So here this is the correct answer, the goods that have come into the country of import. Okay. We can take an example in this, like there is a story of Ramesh importers and the bill of entry. Okay. Let's see the story here. Ramesh Importers, a company based in India, imports machinery from a supplier in Germany. The machinery arrives at the port of Mumbai and Ramesh Importers is required to submit a bill of entry to the custom authorities to declare that the arrival of goods. Now Ramesh Importers prepares the bill of entry, which includes details such as the description of the goods, the quantity, the value, the country of origin. The company submits the bill of entry to the custom authorities along with the other required documents such as the commercial invoice and the bill of lading. The custom authorities verify the documents and assess the duties and taxes payable on the imported machinery. Once the duties and taxes are paid, the custom authorities allow Ramesh importers to clear the goods from the port and take delivery of the machinery. In this example, the bill of entry serves as a declaration to the custom authorities that the goods had arrived in India and it is used to assess the duties and taxes payable to the imported goods. So, bill of entry is required to show that the goods have come into the country of import. Yeah. Moving to the next one here. So, crystallization, like conversion of the foreign currency bill into the home currency liability. And yeah, one more question is there, the Incoterms, which confirms that the price of the goods is inclusive of insurance and freight up to the port of destination is called, and the four options are given here. Yeah, see, CIF, that is cost, insurance and freight. It is like it is an Incoterm that confirms that the price of goods is inclusive of insurance and freight up to the port of destination. This means that the seller is responsible for arranging and paying for the insurance and freight of the goods up to the port of destination. Okay. And the buyer takes responsibility from the point onwards. So CNF, we know that here cost and freight. This is not correct here. CIF is the correct answer. Cost, insurance, freight. CPT is carriage paid to, and CFI not a valid Incoterm. If we can see the here, Incoterms are like a set of 3-letter trade terms that basically outline the responsibilities and obligations of buyers and sellers in international trade contracts. They basically clarify the rules and terms of sales, specify who is responsible for cost, risk, and task associated with the transportation and delivery of good. Basically, there are 11 types of intercoms, and each intercom defining the responsibilities of buyers and sellers in different scenarios. And Incoterms are basically published by the International Chamber of Commerce, that is ICC, and are widely used in international trade. They provide a common language and a framework for buyers and sellers to communicate and agree to the terms of sale. So here we can say LC issued in lieu of guarantee is a document of promise in respect of non-performance, that is standby letter of credit. Okay. So thank you so much for watching this video. I hope you like this video and this video helps you in clearing so many concepts. If you like this video, do comment, like this video, and also subscribe to the channel. We'll wait in our next video.